Com studio. We're going to be talking about the brief that has been filed claiming that the president engaged in an action that was an incitement to insurrection. We'll be talking about that later on. Also, we're talking about how the Democrats are trying to make this Republican woman from Georgia, the one who believes in QAnon, the face of the Republican Party, but Democrats never make people like Maxine Waters and Chuck Schumer, as I said earlier, the face of the Democratic Party, despite some of the hideous things that they've said and done, which for some reason nobody seems to bring up. All of that and more. Now, I've been trying to make sense of this GameStop thing and what's been going on and how it's been characterized as David versus Goliath. And I am a big fan of investing in the stock market. I'm a big fan of believing in America. I believe in investing. I don't believe in gambling. This strikes me as being as gambling. But as near as I can figure it out, I'm going to have my guest straighten me out in a second. Here's what I think happened. GameStop is a retail company, and they sell video games. And I drive one every now and then, and little by little, it seemed to me there are fewer and fewer people in there. And it seemed to me it's going to go the way that Blockbuster went when people can then get their stuff online without going to somewhere and picking up and having to bring it back. So my suspicion is that GameStop is having the same kind of problem. So apparently some big money people, they're called hedge fund people. Hedge fund is just a term meaning rich people giving money to people that they think can get a better return than they could if they stuck it in a mattress or put it in a mutual fund. So some smart hedge fund people driving by GameStop probably thought the same thing I thought, and that is that this company is going to do badly. The fundamentals are going to get weaker and weaker, and sooner or later it's going to do badly. So let's short the stock. Short is a term that means people borrow the stock they don't own. They promise to pay it back later on at a lower price, assuming that they're right that the stock goes down. So if it goes down, everything is wonderful. But if it goes up, your losses could be indefinite. Now, here's what happened. There is like a bulletin board called Reddit, where a whole bunch of people can engage in a bunch of other people around certain specific topics. And there is a category, a topic called stocks. And a bunch of day traders go back and forth and talk to each other. And somebody said, hey, there's a bunch of rich people who are betting that GameStop is going to go down. Let's buy it so it goes up so they lose their shirts. And so that's exactly what happened. A bunch of people got together and started buying GameStop. The stock started going up, and these hedge fund people started losing their shirts. Now, the application that's used to trade is called Robinhood. It's a free trading application. People can trade for free. They don't have to pay a commission. Somebody contacted Robinhood and said, hey, we're losing our shirts. Stop trading. Don't let these guys keep trading. Now, that's when the government got involved. That's when Elizabeth Warren began complaining and Ted Cruz began complaining. When you have two people on two different sides complaining, maybe something is up. And the argument is this. When the hedge fund people make a boatload of money, nobody says a damn thing. When they lose money, all of a sudden the government cares. That's kind of the way where I think this is. Now, one final thing before I bring on my guest. Assuming that the fundamentals were bad, that is to say that these smart hedge fund people were right when they predicted that the stock is going to go down. Even though it's going up right now, the fundamentals haven't changed. So the people that made money going up could very well lose a whole bunch of money when the stock goes down, as it inevitably will, assuming that the fundamentals were as bad as hedge fund people thought in the first place, which is why they shorted the stock. I'm done. Now, my guest, founder and producer of Freedom Fest. That's the annual conference held in places like Las Vegas. This year it's going to be held where
South Dakota.
The what do you call it? Where Lincoln and Washington and Teddy Roosevelt are in South Dakota. South Dakota, North Dakota. You know where the Mount Rushmore. Thank you. Thank you. It's written right here, Mount Rushmore. I hadn't gotten there yet. Anyway, this year it's going to be in Mount Rushmore. Now, he is an author of a boatload of books, 25 books, I guess.
Yep.
Including Maxim of Wall Street. He's got a Ph.D. in economics, teaches locally here in California at Chapman University, where he received the My Favorite Professor Award for the past 41 years. Please welcome back to the program, economist Mark Skousen.
Hey, Larry.
Mark, how are you?
I'm doing really well. I think you hit the nail on the head pretty well. You know, there was a lot of bad actors in this GameStop story, but I think you need to broaden it a little bit because it starts with the Federal Reserve. The Federal Reserve, in order to counter the lockdown that the government imposed, engaged in a huge inflationary policy, buying up government bonds and cutting interest rates to zero, and they created a bubble on Wall Street. Well, there's an old saying that I have in the Maxims of Wall Street, and when the wind blows, even the turkeys will fly. And so a lot of stocks like GameStop, and you're absolutely right. I mean, GameStop has a book value of $5. And here's a stock that was trading for $30 or $40, and so the hedge funds looked at that and they said, well, this is a great short. I think we should short this stock. But you never, they violated one of the rules of Wall Street, and that is never short in a bull market trend, and that's what they did. Meanwhile, you had this Occupy Wall Street group in Reddit who want to really basically, they're the Occupy Wall Street people. They saw in 2008 as young people, in students, and I teach these students all the time, these students want revenge. They felt that everybody was bailed out except their parents. And they were right. The hedge funds and Wall Street got bailed out. So this was their form of revenge. And unfortunately, he that lives by the sword dies by the sword. So all the people who got in when it went over $300 a share, of course, they got wiped out. And the hedge funds finally got their money back, although they didn't get much of it. This is a perfect storm kind of situation where there are a lot of bad actors all playing a role. What I fear is government regulation coming in and not allowing speculation at all, and that's a very dangerous game.
My guest is Mark Skousen. He is an economist. Mark, back up for me. Now, all the stuff that you say that the Fed is doing, is that's another way of saying the Fed has been printing money, which will ultimately be extremely inflationary if it is not already.
Absolutely. The money supply increased at the highest rate in our lifetimes. 26% last year increased the money supply. And where's that money going? Well, it's going into some consumer prices, but it's mainly going into the stock market. It's going into real estate. It's being exported outside the U.S. So you don't see it in the consumer price index, but you certainly see it in the stock market. And when that happens, you can see why hedge fund people are saying, well, this is a perfect short. But so I don't think this is going away anytime soon. I do think you have this new phenomenon of young day traders who have been really improving their skills over time.
Mark, we're going to take a break right. We'll take a break right here, and I want to pick up on the other side. I want to hear about these day traders, and has something fundamentally changed now when people invest or trade on the stock market? I'm Larry Elder.